Good evening, friends. The market is defying all the gravity. The Newton law of gravity doesn't seem to be applying the market. It's not only Indian market, even the US market is just moving in one direction, that is up, up and up. Market chose not to look at the valuations. Market is just in the momentum play, and I don't know when that momentum story will get over. No one can pinpoint ये कल होगा, परसों होगा, नरसों होगा, कोई पता नहीं उसका. But fact of the life is that, and of course this I've been kept saying for quite some time. It doesn't happen that the day I say next day things will happen. Market is own wisdom, and that wisdom will play out. If you ask someone today, कि buy this company, it will give you 20% return in 1 year, बोलता है पागल है क्या, मुझे तो 2 दिन में चाहिए 20% return. And that's the kind of mindset has developed. People are not happy with the returns if the returns are in tens. People want to make quick money and some data. And so, today I'm going to present some data which has come declared by some of the India Inc. and that looks little, gives a, of course, yesterday I was reading one article which says that the India Inc. earnings for June would be very, very good. I doubt that would be the case, okay? I don't want to go into debate and argument with anyone who the so-called experts. They may be right, I may be wrong. But when I look at the hard facts, hard data doesn't convince me. Why I'm saying so? You look at the GST collection. Almost the same as what has come for the month of June, almost same as May. And if you look at the Y-on-Y, 7% growth. If you look at some of the data which I'm going to present now, it's all data published. I'm not making any assumption here. And I'll tell you where does the problem lies. Why is the market does not look at this? I have no idea. Market is own wisdom, and eventually we will see that. And that's why I kept on saying that today the momentum is looking extremely good. Will this momentum continue? The answer is no. When, how, what will bring that momentum momentum down? I have no answer. In fact, yesterday I was looking at, we always look at whether the investors across the world, whether they are in a risk on or risk off mode. And what I realize is that the price of currency has come down in last couple of months. In other words, at least one asset is showing that there is a risk of started coming in. But that doesn't seem to be happening with the equity as of now. When happens, what happens, we need to wait and watch. So before I start my presentation, just a small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. And past performance is no indicator of a future returns. I know everyone basically get carried away by the recency bias. And that recency bias sometimes will turn out to be very costly. So what is looking good today may not be good tomorrow. We have to learn from the market cycle which has been happening every now and then. The wise people learn from other people's mistakes. And those who are not so wise will make mistakes and learn. And some people are so this bad in terms of learning that they will keep making mistakes again and again. They don't learn even despite they've gone through that cycle. Today, I was having a discussion with one of our customer, and it reminded me of a story of a Suzlon of 2007-2008. The rest is history, what has happened. There are many companies I can tell you with a lot of confidence which have touched, which are touching new high. For many years, we will not see that price coming back. I gave an example of one Cisco, US listed at one point of time. It was the world's most valuable company in the world. Once upon a time, the price it was quoting in 2007 still below what it is quoting in 2024, and we have seen many cycles in between. Am I right? Something similar can happen with companies which are touching new all-time high almost consistently every day. You will not see that price happening. What puncture that momentum? I don't know. Is it budget? Is it not so great? June numbers? I have no idea. Or some global events that happens, or there's some black swan event that happens, it disturbs. I have no idea. But something has to happen because this cannot continue. As I presented on my Friday webinar, of course I did with my PMS customers, I think, that 150 market cap to GDP, 150%. Trailing 12 months, more than 30x. Very, very rich valuation. There is little margin for error. And error will happen. What form, how it will happen. And right now, you may sound like foolish to you people. Am I right? Because it's not happening what it is happening right now. Right now, things are happening differently. तो जैसे पागल बेवकूफ़ आदमी है, समझ में नहीं आता उसको. Maybe you will realize this as the time passes, and then you will see what Sunil Damania was suggesting was absolutely right, but we did not have that wisdom to understand at that point of time. Let's look at the business update. A lot of corporates have started giving business update. That happens when the quarter ends. So what I did, I focus on the FMCG because these are the companies we have. What are the three companies came out with the business updates? Marico, Dabur and Adani Wilmar. I looked at Titan and Avenue Supermarts because that's also part of a consumption retail. And I looked at the banks, two leading banks. One, the India's most renowned private sector bank, HDFC Bank, and India's one of the leading public sector bank, Bank of Baroda. And what does the trade indicate? What is there in the this one? So let me update that. And of course, there will be some data, and then we'll open the floor for a question and answer. This is a food for thought for everyone. Our job is to present data in a meaningful manner. You people are very sensible enough to understand what to conclude from this. So let me start with the Marico. Marico mentioned that there is a modest uptick in the volume growth for June quarter as compared to March. They are not saying robust growth. The only thing they are saying is that the future looks a little promising. If you look at Parachute, which is one of the renowned brand, I am so sure almost everyone who must have who are attending this webinar would have at least used once in their lifetime Parachute hair oil. Am I right? Low single digit volume growth. Saffola oil has a mid-single digit growth. But when I look at Adani Wilmar, which is also into refined oil, they have a different picture to say. Waho, that is value-added hair oil, demand was soft. So while you Parachute, which is again a hair oil, but it's a coconut hair oil, low single digit growth, value-added hair oil does not seem to have done so well. Consolidated revenue of Marico for this quarter will be high single digit. High single digit. Somewhere in the region of anywhere between 6 to 9%. That's what this. The only good thing Marico talk about is that OPM growth would be faster than the top line growth. In other words, there will be a margin expansion that one can expect for the FMCG company. Now, when I look at Dabur, which is another leading FMCG company, they also said very clearly that OPM growth will be faster than the top line growth. Am I right? But they are saying there is sequential improvement in demand. What as compared to, so Marico also said, Dabur also said. Dabur has been consistently saying that rural growth is picking up. So this is not the first quarter they made a statement. They made a statement last time also. And they do believe, as Marico believe, that demand going forward for the rest of financial year should be good. Why? Because of normal monsoon, prediction of normal monsoon. and growth in the economy. The monsoon now is in surplus, and yesterday, like Bombay, those who are from Bombay would realize how much amount of rainfall that we see. So, in fact, we had to declare half day for our staff so that they could reach in time before the sunset to their homes. Okay, but having said that, India volume growth will be mid-single digit for Dabur. So again, mid-single digit is somewhere near about anywhere between 4 to 6%. Travel and out-of-home consumption was little subdued for Dabur. Why? Because of scorching summer that they've used in the business update. And again, and if you look at what Marico is saying, what Dabur is saying, that they are going to spend more money on promotions and brand building. Why would you do that? Because of the intense competition. So in other words, the competition is very, very high within the industry, and everyone wants to either protect their market share or want to increase their market share. That's what the clear-cut hidden message comes out from both Dabur as well as the Marico. Adani Wilmar, for his surprise, has said volume growth of 13%. So while Marico and Dabur said low single digit volume growth, Adani Wilmar is saying 13% growth Y on Y. And what comes as a surprise to me, that package atta. So my understanding is that, is that most of the people, at least in urban part, now use package atta. No one goes to the traditional, the atta chakki wala, you buy what we call gehu and give it to someone to make a atta. I think most of the people do package atta. And they are seeing significant slowdown in past 3 quarters. Now that's a more staple food. Why would someone would slow down in the staple food? I'm trying to understand. Well, I'm still not able to connect the dots. Okay, while volume growth has been so much good for Adani, overall, of course, that's mainly driven by the foods and FMCG business, edible and food and FMCG that did extremely well. But what comes as a surprise to me is that edible oil and food and FMCG, that's the 2 segments that they define. The volume growth is higher, but value growth is lower. What does this mean? It clearly means that the volume growth is happening, but at the lower price. Is it because of higher competition? That's what my understanding and belief is. So you are able to grow volume, but not able to command at the higher value. That's what basically it gives you. Now let's come to the retail side, which is also consumption side. Titan, India's one of the finest organized retailer, coming from group of Tata. Demand for jewelry was muted. We all know that gold prices are moving up, and that has impacted the demand for the gold jewelry. When you go to a jewelry shop, they will try to push you for the studded jewelry. Why? Because the margins are much higher and superior in the studded jewelry as compared to the normal gold jewelry. आप देख लेना. There normally you will see more discount being offered on the studded jewelry as compared to gold jewelry. Why? Because studded jewelry carries a higher demand, so there is a margin for reduction. So my sense is that when Titan declares the numbers will not be so robust. Why? Because the demand was muted and top line mainly driven by the gold jewelry, not by the studded jewelry, which has a low margin business as compared to this one. So again, if market is doing well, I thought people would buy more of a gold jewelry, but that's not has happened. Some money did go to the real estate, but not to the jewelry side of the business. That's what the sense I'm getting, and maybe one of the reasons could be that price hike. People believe that price have gone so much, let's not do that. Diamond prices have come down, and yet people are not willing to buy the studded jewelry. That's also surprised me. Logically, when the price goes down, people should buy more of that, but still not able to, not buying. Maybe because of CVD, that the lab diamond has come in, that's impacting. And I don't think Titan sells the lab diamond. I think they've expressed a desire to sell. I don't know whether they started selling or not. But I must tell you, the natural diamond price have come down by almost 30-35%. And yet the studded jewelry demand was low for the Tanishq, Avenue Supermart. Now, what surprised me that Avenue Supermart, when you look at the numbers, they normally used to give how much staple growth. They do sell garments and so on and so forth. They've not given that kind of a bifurcation this time in the business updates, which surprised me. Why should you not disclose that? And what I looked at it, every June quarter, compared to previous June quarter, what has been the growth? And growth is almost similar to what it was there in June 2023 over June 2022, and something similar June 2024 versus June 2023, despite their opening stores. So growth doesn't seem to be there, and I don't know whether this growth is driven by the what we call the garments business, or growth is driven by some other business. We don't know that, so whether it's FMCG or so on and so forth. But the way Adani Wilmar said that staple atta is subdued demand, my sense is that the staple as a category may not have grown so much. And if you look at Parachute, also little low growth, Saffola mid single digit growth. The volume seems to be a little concern, and pricing, as we all know, has not gone up. In fact, there is no pricing power only at this point of time in the industry. In the sense, it's not there, but there is no need also. Why? Because the input costs have remained quite subdued, and that's the reason why FMCG companies are not doing any price hike also. On the contrary, they are reducing prices to some extent. Now, banks gives a idea about what's happening in the ground level. Both HDFC Bank and Bank of Baroda have seen decline in their advances. I am talking about decline as compared to March 2000. Both. Even if you look at the retail loans and the deposits also have grown little low. Actually, let's be very honest with you. For HDFC Bank, so while Bank of Baroda has not disclosed, but CASA deposit declined for HDFC Bank. Now, CASA deposits are those deposits which helps you to increase your NIM. Why? Because current account पे आप interest देते नहीं हो और savings पे बहुत nominal देते हो. It is lower than what it was there in March 2024. And when you look at more granular information which HDFC Bank did give, the current account has been major portion for that decline as compared to savings. Savings accounts also declined, but mainly driven by. I'm just trying to understand where are these deposits are going. Is the people spending more than what their income, and that's why savings have come down? Or the corporates, normally the current account is with the corporates or the businesses. Are they dipping into their, so are they running into a more working capital requirement kind of stuff that money is not coming back? I don't know. Where is that? I think as and when this company declares numbers and post-con call, we will get some color on that. So is it the higher working capital? That's it. And if you look at, in both the cases, HDFC Bank as well as the Bank of Baroda, the corporate loan or the wholesale book, both have declined. The growth, whatever the growth we saw in the retail was driven by the retail loan. So on one hand, your CASA deposits are coming down. On the other hand, your retail loans are going up. Is that the equation doesn't fit into my mind, to be very honest with you. And I think I need to go more detail into that to understand how does one make this equation sensible. In the sense, are people spending more than what they are earning? Or they are borrowing more than what they can repay eventually? Is that the danger that we are looking at it? We need to wait and watch. And of course, more clarity will come as and when these banks will come out. But okay, what I wanted to convey with this business updates? One thing which comes out very clearly, there is some amount of slowdown in the economy. GST collection shows that. Of course, advanced tax collection is very good for the direct tax. But the GST collection is will slow down, number one. Maybe because of what we call heat wave, maybe because of election, we don't know whether it's a 1 quarter impact or it's going to sustain, we don't know. And second thing, the commentary coming from the business updates coming from the banks, retailer, or the FMCG company looks very promising in that sense. Of course, the future looks good, but the June numbers doesn't look very, very exciting. So my sense is that June numbers will have more negative surprise than the positive surprise, and that could be the reason for market to correct. And some of the, there is a very history suggests that whenever the markets are good, corporates are more optimistic about the future, and they're also more optimistic about the financial reporting numbers. We need to wait and watch what basically happens. If they don't live up to the expectation of the market, those companies can correct substantially. What happened to the last 1 week? Mid and small cap, almost very similar. Again, mid cap was a little up as compared to this one. PSU stocks again made some comeback, mainly driven by the defense. Defense seems to be. FMCG companies up by 4.4%, as you can see here, clearly because of the demand outlook given by the Marico and Dabur really lifted it. Pharma made some amount of comeback. Auto, we all know that discounts have started happening. People have reducing prices. There is a more inventory, but yet the Nifty Auto Index was up by 2.8%. Okay, and if you look at the metal, is a laggard. The Bank Nifty and Bank Finance, which shown some resilience last week, did not live up to that, and they literally underperformed. Bank Nifty metal, as we spoke last time, purely because of what happens to the China, and China seems to be a little struggling at this point of time in terms of economic activity. Not much change in the indices. YTD, Nifty and Sensex both are up by 12%, but more action seems to be in mid and small cap, up by 30%, mid cap, and small cap 27%. Again, I repeat, there is more froth in the mid and small caps, and one has to be extremely careful of what kind of company you do. Now, while going gets great, people love that, but when the situation will turn around, you will find it difficult even to move out of that. Why? Because I distinctly recollect once a statement made by Sankar Sharma on CNBC, and he said that when you get into a small cap and mid cap, it's like a mafia. It's easy to enter, very difficult to get out. There's a movie called Naam. I don't know whether you've seen that movie, Mahesh Bhatt. Sanjay Dutt was in that movie, and Kumar Gaurav was there. And that Paresh Rawal, who is a villain, makes a statement, "Ye gali dikh rahe ho, ye one-way street hai." When Sanjay Dutt wanted to quit that mafia business. In a small cap, the mini companies are running much, much ahead of the fundamentals. If time permits, next time basically I'll try to see you how does this the small cap jo company index hai, what kind of what kind of price to earning they are commanding. The commanding, so I'll give you the bifurcation in terms of what percentage of company where, and they are commanding such a rich valuations. There is a little margin for error. If the numbers are not living up to the expectation, exit में तकलीफ होने वाली है. Even if you wish to get out, you may not be able to get out. Why? Most of those companies may be available at the lower circuit. That's the thing. So what looks very good on the paper will remain paper. It will not convert into a cash. So that's why my request to all of you. Of course, I've been keep saying this for quite some time now, and I again repeat, because sometimes you never know what could be the trigger point for you to act. Be careful of what you are doing. Okay, be sensible. Someone was asking me, I'm so smart, I'm booking profits. But after booking profits, where are you putting that money? Again, putting in the same, what you call small cap and mid cap. तो फिर जब भी तो समझ लो कि आप ए से बच गए, लेकिन बी में डाला, बी में तो फंस जाओगे ना. So that could definitely, can definitely happen, or maybe it may happen. Be careful of what you are doing to. Sector rotation will happen, and if you are not participating in sector rotation, even though you may be outperforming significantly right now, maybe by end of December 2024, you may be underperforming. So whatever the gain that you see may get evaporated. So my request to all of you, be careful of what you are doing in. Know what you are doing it, because sometimes we don't know what we are doing. And that could be the reason for your underperformance going forward. FIIs have turned positive, and if you look at for the full year now, 2024, they are positive out near about 15,000-16,000 crore. FIIs put in money, they are net buyers of near about 11,000 crore. It's not that they bought very substantially in 2024, and yet market did extremely well. Should you read too much into it? Because FII money is a little hot money kind of a stuff. Today they may be positive, they can turn negative in no time. With this, let's open the floor for question answer. Yeah. Johnson is saying, subsequent to fund house launching a scheme based on 4 defense stocks, there was a rally in them. Is the rally over? I'll give you some historical perspective, Johnson, sir. The mutual funds are one of the funniest things I've always observed. They will come out with the thematic funds at the top of the cycle. We have seen that happening in Y2K boom. We have seen that happening with IT thematic. We have seen that happening in infra, and this one in 7-8, when the pharma was the darling of the investors, somewhere in 12, 13, 13, 14, lot of thematic funds, and something similar happened. I don't want to comment on anyone's the intellectual, but historical trend suggests that when the theme is at the peak, you come out with that thematic fund, and that's exactly what has happened. You know that in our PMS we did own one defense stock. We lock in the profits because we believe that, or we realize that this company may not be able to generate going forward. And we locked in. We don't claim that we always able to sell at the top of the price. We don't claim that, and we will never claim that. So we did that. Today, many of these defense companies are running ahead of the fundamentals. So don't get confused with the business outlook and the share price market outlook. The business outlook remains very robust for the defense companies. Why? Because India will spend more money on the defense because geopolitical, number one. Number two, we will also be exporting good amount of defense, which we did in FY 2024 also. But how much value you give? And I think that's where the question is that. So our sense is that we do believe that some of the defense companies are running little ahead of the fundamentals, and they should correct. And that's the thing. Is the rally over or not? It's very difficult to say. But yes, many of the defense companies are quoting at a very rich valuation. From this level, the risk reward doesn't seem to be in the favor of reward. That's what our sense is. Remember, market has its own logic. What looks very expensive may further look expensive, and it can frustrate you longer than you can remain rational. I must tell you that. So be careful with that. Murthy sir saying, I have holding of 50 lakhs mostly in small and mid cap. Can I transfer them under PMS service? Definitely, sir, you can do that. You can definitely transfer the shares. Another option is that, sir, you can sell the shares, lock in the profits, and give the fresh money to the PMS. Both the options are possible. See, remember, in our PMS right now, we are 80% in large cap, 10% in about in mid cap, and 10% we have taken a liquid funds. So even if you transfer the shares to us, most probably it will get sold out. Why? Because those companies may not be in our master list. So to start a clean slate on the PMS, I would suggest you please sell the shares, lock in the profits, and give the money to us. Suresh sir, my assets are spread across fixed income instruments and equity instruments in the ratio of fixed 33, equity 66. In equity, I am invested in Mojo model portfolio, Mojo PMS, Mojo Deepavali portfolio, personal portfolio, mutual fund portfolio. Now I intend to take exposure to gold, which is missing in my portfolio. I want to know difference pros and cons between the sovereign gold and gold ETF. Between the two, what will be your advice? Kindly advise. Also, what can be the ideal exposure level to gold as a percent of total portfolio? I am retired, 67 years old, and has no liabilities and sufficient monthly cash flow. To Suresh sir, I have taken time and again that as a part of assets allocation, 10 to 15% should be in the gold. Not because your view on the gold is positive, but because gold will bring in stability to the portfolio. Why? Because if other assets start cracking, gold will act as a speed breaker kind of a stuff. It will give stability to the portfolio. So please put 10 to 15% as a total. Now your question between sovereign gold bond and gold ETF. So I don't have any answer to it. If you ask me, I will play very safe, 50% in gold ETF, 50% gold sovereign gold bond, SGB. Advantage with SGB is that, if you hold till maturity, I think it's non-taxable. And it earns 2.5% income also. But I have not done an analysis how the price of SGB moves with the gold ETF. I have not done that analysis. But it's a good food for thought also. So what I've done, I'll tell you what I do actually. Okay, maybe if you want, I have very little exposure to SGB. But I do, so as and when I want to buy gold, I basically buy gold ETF. And because why? It's a very neat and clean transaction. You buy today, it gets reflected in your demat account, so on and so forth. It becomes a little easy for me. That's what I do actually. And as and when I want to get out, I can get it out. In the ETF. So my sense is ETF, but it's not more logical. It's just because of my perception and my convenience. But since you asked me, let me also do a study on between SGB and gold ETF. Had I invested in gold ETF maybe 5 years back, and if I invested in SGB 5 years back, where would have been the difference in terms of returns? It's a good exercise to do. Let me do that. Maybe if time permits, I'll try to do in my future trend analysis, which is I'm doing on Friday. Harsat Kale sir is saying, how do you foresee energy and power sector for next 5 years? Should I invest in ICICI to energy and power and FIO? So I'll not comment on the mutual fund because I'm nobody to comment on their what is the index, how are they going to invest, and so on and so forth. But demand for power and energy is going to be extremely good for next 5 years. Why? Because demand for power is increasing year after year. Maybe because of global warming, because of the growth in the economy, people's standard of living improving. People previously hardly used to use air conditioner. Now people do use air conditioner, very frequently. Okay, so demand is going to be good, but it's also so sometimes we do get confused between the business and the valuations. Some of the valuations within the energy and power are commanding very rich valuations. So while business looks extremely good, sector looks extremely good, what is not there in the price is an area of debate. Am I right? And I will not comment on any what we call AMC. What I don't know what the construct are, how are they going to invest, and so on and so. I have not studied, so will not be able to comment on that. Manish is saying, hello sir, your prediction was mid and small cap fall and large cap stocks move up, but you also said the market will go down. My question is, if large caps up, then how Nifty market will go down? No, Manish sir, what I said, okay, I think my apology if I have not been able to convey it in a very clear-cut manner. There is a float in the mid and small cap, so it should come down. I'm not saying the Nifty will not come down. I did mention that Nifty can go down to 19,000 level also. But as and when a market rebounds, the fall will be little less in the large cap as compared to mid and small cap. And as and when the market will rebound from that level, the large cap will lead the rally, not the small and mid cap will lead the rally. Okay, and within that, the companies, those who have not participated yet, I think they are the one who is going to lead from the front in the next leg of rally. So that's what my sense is that. So I hope that's clear, Manish sir. Now, if it's still not clear and still the ambiguity, please again ask, and Amir, please take it up again, Manish sir question. Mohit is saying, thank you for your insights and continued guidance in this certain and volatile situation. Why are the NBFCs underperforming despite good quality with negative trend? What is affecting the growth story? I think one growth thing is affecting, Mohit sir, is that RBI has tightened the norms. If you remember, RBI was little concerned with the unsustainable growth within the NBFC sector, and they made life little difficult. Even they put some restriction on banks to take exposure to the NBFCs, and that's one reason the market did not like it. But if you have to really pay contra at this point of time, may not be a bad bet to go into NBFCs, because as I was saying, in sector rotation, what is going to happen in the sector rotation, that the sector which have not participated, they may participate going forward. And my sense is that, let me tell you one thing very frankly, in our PMS also we started building a position in one of the leading NBFC. we believe that companies should do reasonably well, and that's why we started doing that. So that should do well. As far as growth is concerned, the growth may remain a little subdued because, as you know, that I presented some data on the HDFC Bank and the Bank of Baroda. The growth could be a challenge. If it is growth is challenge for the banks, it could also be a challenge for the NBFCs too. Okay, but what is not there in the price? I think that's a question. So sometimes you have to de-link from the business to the valuations, and some of these NBFCs are looking at very good valuations. If you have patience, I think it makes a lot of sense to go it into this as a contra buy. Anil Rastogi sir says, good evening, Sunil sir. One of the large cap Mojo stocks have given more than 50 to 100% return in my personal favor. Should we book profit? Please advise. Sir, my advice would be, please look at the score of that company and take a decision, because I don't know which company you are. If they are continuing Mojo stock, then you should not. As simple as that. NC Ramesan, Sunilji, the performance of many stock of the month currently is found to be very bad. Is it the problem related to the stock selection, or otherwise what subsequent action you are taking to set right the deficiency as above cases noted? So Ramesan sir, I will not be able to comment on the stock of the month, because it will not be appropriate my part, because I handle the PMS. But when you say it is bad, so I did look at the performance. I don't think they are bad. Now the problem happen is that we want each and every stock of the month to be multi-bagger. That doesn't happen, sir. Am I right? So for example, Wellspun Corp, which was struggling, if you remember, and is up by 17% in the May one. The Quest Corp is up by 8%. I'm just going to. JK Cement has not done as much as we would have. Aprota is up by 5%. C8 up by 12%. Persistent 42%. Okay. LIC Housing 64%. Again, October 2020, less than a year. September 1, which is Jindal Steel, up by 46%. August, which is 11 months, 57%. LTTS 29%. Last July, Dr. Reddy 41%. May 2023, Garden Ridge up by 400%. So if you look at it, and if you look at combine this, I think the average returns are in the region of, if you look at everything in last 12 months or 13 months, you will be making about 50-60% return as a combine, which is a bad. I don't think it is a bad actually. Maybe tomorrow Mohit is making a presentation on stock of the month. You should ask him basically. He's the best person to answer that. According to me, most of the stock of the month would have significantly outperformed the benchmark, the index. Okay. But I don't know what is your definition of underperformance. I don't know. It's bad performance. I don't know. What does that mean actually? In fact, as I can see, each and every stock of the month is in green actually. I don't know why you are saying it's a bad actually. Anyway. What are your views on the rice shares and the sugar shares? Both industries have export banned by government. So Naman sir, I think the sugar looks more promising, because this time the sugar, that couple of things I expect. Whether that happens or not, I don't know. The monsoon is going to be good, okay? And if monsoon is going to be good, the output of sugarcane would be good. And if sugarcane output is good, we all know that ethanol blending that we discuss about, which is the restriction, that will get lifted. And second thing, sugar export ban, which has been there, not the ban, but the quantity that you can export, it will get further revised upward. So rice, I don't have any idea much, so I will not be able to comment on rice. See, what I've observed for the rice as a sector is that I think they basically move up in a very, their spots happens in a periodic, but they are not able to sustain over a medium to long term. So sugar looks more, what we call structurally good story, because Government of India also wants sugar to do very well, and that's one of the ethanol blending program will see a lot of impetus from the Government of India also, because we want to reduce our import bill also. Today only petrol, only diesel, what we get blended with, it's an ethanol blending program. So I think it's the petrol get what we call blended, or diesel get blended. I'm sorry, I'm getting confused now. Right now, basically. So if assume that it was petrol get blended, I think the government also wants to blend with the what we call diesel also, or vice versa. So that's going to happen. So my sense is that demand for ethanol will go up, and if that goes up, I think there is a lot of good chances that the sugar companies should do well. So I'm more bullish on sugar companies as compared to the rice company. Okay. And I'm just saying, ethanol can be mixed with gasoline. Okay, that's a petrol. Okay, not the diesel. So sorry, I got it right. Okay, it's a petrol which gets more. That's not the diesel. Vikram Singh Ji Rao. Good evening, Sunil Ji. I fully agree with your views on markets at a real expensive rise in correction unit. But आप direct भी मत प्रॉफिट बुकिंग से भी मना करते हैं. आई एम कंफ्यूज. अब बट आप डराते भी है, बट प्रॉफिट बुकिंग से भी मना करते. नो विक्रम सिंह जी. ओके, आई हैव सेड टाइम एंड अगेन, योर प्रॉफिट बुकिंग शुड बी अ फंक्शन ऑफ योर stock. If the company is done ahead of the fundamentals, please do book profit booking. Today I was talking with someone. He said, "Was I'm making 100% profit or 50% profit?" He mentioned some numbers. I can't recollect now. Should I get out? And I said, no, that's not the way to get out. Otherwise, what would happen? You will miss out on multi-baggers. So what you should do is the company running ahead of the fundamentals. If the company does not, like we locked in profit in one of the defense company because we thought this company is running a little ahead of the fundamentals. We locked in the profit despite the business looks good, but the valuation looks expensive. So your strategy should be, Vikram Singh Ji, is that very simple. Look at that company and go company to company, okay, and see whether this company deserves to be at this point of time a part of your portfolio. Profit booking or loss booking is different. First thing, should it deserve to be part of your portfolio or not? If the answer is no, please get out of that company, whether it's profit or loss. And that's how you should look at it. Okay, so it's a function of whether this company is running ahead of the fundamentals. Yes, get out. If no, please continue to hold. Even if the company is gone up by 50%, 100%, whatever the case may be. Vishwambar sir is saying that as FD rates are coming down, the investors are inclined or forced for the stock market investment. Is it true? See, it's not forced, but you know what is happening is that there is a fear of, there is something called FOMO, fear of missing out. You saw your friends making good money in stock market and he'll boast about it. अरे मैंने तो ये कंपनी में डाला. See, the beauty in this market is that everyone will tell you the success stories. No one will come and tell you a failure stories. कि कौन सी कंपनी डाला और पैसा अटक गया उसका, वो नहीं बताएगा आपको. Now what happens, you know, you say, साला ये तो बहुत पैसा बना रहा है, मेरा पैसा बनने जाए, मैंने तो एफडी में रखा है पैसा. Basically, people are taking that money out and putting that money into the equity market or the mutual fund. And as I was explaining to you that HDFC Bank, the CASA numbers have come down. And even savings account has come down. Maybe the one reason is that money must be going to the stock market or to the mutual fund via the stock market, but via mutual fund. We don't know where that things are actually happening. We'll get more clarity, more color post-con call of HDFC Bank. But that is what is happening. So yeah, is the money? I don't think the FD rate is a reason. I think the more greediness have come, the more likely more money to be made in the stock market is the reason. So assume if the FD rate remains same, still that money will go out from the FD. Why? Because stock market तो एक दिन में 60% रिटर्न बन रहा है कंपनी, बहुत कंपनियों का तो वो तो 7 साल एक साल में बनने वाला है एफडी में. तो how does it make a sense? So that greedy has taken over the human emotions, and that's the reason people are investing more money. Is nothing to function of a lower FD rate. There's nothing to do with that. Mandaj sir, I think the private sector bank may not report so great numbers, but as you know that the advances were declining, the deposits were declining, NIM could under pressure. But what is not there in the price? So some of these private sector banks are available very good valuation. A lot of negatives are already there in the price. Yesterday, HDFC Bank came out with the numbers, not the numbers, of business updates, and the script did go down. So it's there in the price now. So when the number comes out, will they correct so much? The answer may be no. So that's how we should look at it. Very good question, Anil sir. Given the fact that Nifty is at 24,450, do you think the low side could be as low as 19,000 or can be little higher now? It could be little higher. I have not done the recalculation, to be very honest with you. I'm waiting for the June numbers to come, and maybe I can revisit my prediction about the how much low the Nifty 50 can go. But you are right. Does it call for a revision, upward revision in the bottom? Maybe yes. I need to revisit. But try to understand this rally which has happened, especially post-election, to some great extent is unwarranted. There is nothing change on the fundamental side of the business, and yet we have seen the rally. I don't know what would have budget would have, because we keep hearing about more demands coming from some of the allies partners of the BJP. How much a finance minister considered to that is also a matter of a debate. What government does in terms of, there is a news that FNO, the panel has suggested some new revision in the FNO segment. Whether that get implemented, in what form it get implemented, we need to wait and watch. So right now, I don't say I need to revisit 19,000, but I will definitely revisit this 19,000 prediction post June numbers, because that time it will give a lot of clarity in terms of what the commentaries are and how the India is looking forward in terms of the business outlook. And of course, we'll also get a clarity about how good or bad the numbers are. As I predicted, and I've said that I don't expect June 2024 numbers to be great, but that's my prediction. The Indian can surprise me positively also. So I want to now look at that numbers and then revisit 19,000. Does it need revision or not? Abhinav, I have two questions. As per Service website, the PMS return for 1 year is lower than the BSE 500. Please throw light on this. So you are right. You are looking at our 1 year return. So there is one strategy which is completed 1 year, which is Sol. Power is not completed 1 year, and we are little underperforming the benchmark. Reason is very simple, because today the market is driven by the momentum, and we don't want to be part of that momentum, because we don't know when the party will get over, and we don't want to get stuck where we don't able to exit from that party. So what we have done, very conscious decision we have taken, that we will move to the quality stocks. And if you look at the last 3 months and 6 months on the SEBI website, you will see significant outperformance compared to the benchmark. So we want to play little safe. We want to play little this. We are not running a sprint. We are running a marathon, and we want to create wealth over medium to long term. So sometimes what looks very exciting in the short term may not be so in the medium to long term. Second question, you suggested in the previous minute the sector rotation taking place. Which are sectors where the rotation is happening? You look at, and if you look at last 1 month, which sector did well and which sector did not do well. I think that will give an idea about sector rotation. If you want to go more details, I did webinar on 2nd July. Why don't you refer that webinar? That will give an idea which sectors where money is going in and which sector the money is going out. विनोद सर, लार्ज कैप में स्टॉक में स्टिप करें क्या? प्लीज़ करिए, कोई गलत बात नहीं है उसमें. Muthu Subramaniam sir, when would you start doing webinars exclusive on InfinHub and start giving advice on international stocks? I'm afraid I will not be able to do any webinar for InfinHub customers, because I can do webinar only for the Indian market, for the PMS. I cannot do anything, and I don't have any much advice also on the international market, to be very honest with you. I may have a macro view about the global markets, but I would not know individual company on the international market. Am I right? So I'm afraid I think the best thing you should ask Muthu sir, tomorrow Mohit will be in front of you. Maybe you should ask him. I think he's the best person to give more clarity on that. Bharat and Nanda Kumar sir is saying, which sectors are safe to invest during this time? There is nothing called safe. I must tell you that when markets are at all-time high, there is nothing called safe. The only thing where the downside would be limited, and my sense is that downside could be limited in FMCG, banks, NBFCs and IT. Sushil, please educate us how to identify company running ahead of its fundamentals. Sushil sir, I have said many times, you look at the growth in earnings, you look at the growth in the price. If the company is not going to grow as fast as what the share price are going, that clearly says that the company is running ahead of the fundamentals. Am I right? So suppose, just to get an example, for example, company growth is only 5%, 7%, top line. Bottom line is growing only 5-7%. If the company is commanding 100 ka P, and you know that company doesn't have any expansion plan, does not have a great prospects, is running ahead of the fundamentals. Classical example is Sushil sir. If I don't know whether you attended my webinar in 2022, I used to talk about the chemical companies, that they are running ahead of the fundamentals. Am I right? And again, I give an example of that. So that's the same way. Principle remains the same. Only sector undergoes change. So look at those companies which are commanding a very rich valuation. I know one company which commands a valuation of 120, 110 price to earning. When I look at the return on equity in single digit, when I look at the operating profit margin, very low operating profit margin, I don't understand why this company should command such a rich valuations. But it's commanding, people are lapping up that shares. It's running ahead of the fundamentals. As and when this company underperforms, it will underperform significantly. If you remember, I said HDFC Bank at once upon a time, running ahead of the fundamentals. I did mention Avenue Supermart, running ahead of the fundamentals. Am I right? You look at 1 year, 2 year, 3 year, 4 years returns of Avenue Supermart, underperforming very significantly. So, like PC Jewelers at once upon a time, Manchester Beverage at once upon a time, okay? So, we need to understand that is the business deserves that kind of a valuations? If it is not, you should not. So the valuation is a function of what valuation, what rate company is going to grow. If the company is not going to grow, but the market is discounting much ahead in advance, it will underperform significantly, and then you will pay the price of that. It's not so easy, let me tell you, Sushil sir. You require a lot of knowledge about the sector. You need to understand a lot of things about the company's operation, fundamentals, their future capex plan, what's happening globally. Had it been so easy, everyone would have been able to identify, am I right? So it's not, but if you apply your common sense, you'll be able to figure it out. Nimesh Kanani saying, plus my humble request, at least on first week of every month, please provide performance data, please, sir. I don't know, sir, which data you are talking about, Nimesh ji. If it is for PMS customer, first Thursday of every month, we come with the report card in front of our PMS customer. We present all the data. I don't know which data you are referring to first week of every month. So, sir, I will not be able to, if you can specify, I will be more than happy to give more pointed answer to this. No idea, Vishal sir. Microfinance company with respect to budget and near term. Very little idea, sir, right now. Logically, if the government is going to put more money into the rural economy, microfinance should do logically well. Why? Because that's where the things happens. But again, look at the valuations. I think the valuations are very, very critical in some of the microfinance company. And second thing, in microfinance company, also very critical to understand the quality of the management. How good they are in terms of recovery funds and so on and so forth. So don't paint the complete sector with this. There are some good quality companies within the microfinance and they're doing wonderful job, I know. Because I met them and I understood the business model. And some of them doesn't have a very rock solid business model. And sometimes they may look cheap, but they deserve to be cheap. And don't fall prey into that the valuation trap. So be careful with the company that you get into. Basically, that's what my advice would be. But overall, I think it should do reasonably well. PMS data, Nimesh sir, we give the data every Thursday of the first Thursday of the week. In fact, on the contrary, if you're a PMS customer, Nimesh sir, you would have get the data through email also. Not only the presentation, even the recording goes to you. You check your email ID, sir. You will definitely would have get the data. Just repeat the question. Concern ka naam dikhai, please let me see PMS ka. Sir, are you a PMS customer? I don't think you are a customer. Just Nimesh Kanani. Sir, I can't see you as a customer. So if you are not a customer, how can we say data to you? But this data is available on SEBI website. You can check that data. Yeah. Ankit, your insights are really helpful. Looking forward for large versus mid and small cap market. Thanks. So what I'll do, I'll give you data. What I was referring to, sir, was within the small cap, what percent of companies are commanding more than 50 price to earning and so on and so forth. So I'll share the data maybe on coming Friday. मुझे याद दिला देना ना, Amil. I'll just ask my team to basically fetch out the data so that I can present to you people. But I'll do that, sir. Shiva Lingesh sir, Kanwani, please make a time for this webinar. I'll enlighten the larger. Thanks a lot, sir. We'll do that. Most probably, I'll do it on coming Friday only, so that I can present the data. So data comparison doesn't take much time. Only thing I need to get the bandwidth. In fact, more and more bandwidth is getting consumed. So I'll try to see if I can do that actually. So Amir is telling me that time for us to say good night to all of you, because सवाल नहीं है कि टाइम खत्म हो गया. Oh, good. So it means that we have covered all the questions that have been asked today in today's webinar. I'm happy that we could take up each and every question in this webinar. Thanks a lot everyone taking time out and attending this webinar. Tomorrow Mohit will be in front of you with the stock of the month. Thursday I'll be in front of our PMS customer. And Friday with everyone again I'll be in front of you with our future trend analysis. With this, good night. It's a power pack, full schedule is packed for this week. Good night, take care.